Okay, here comes video on Tuesday, the 23rd of November 2021. Just gone 4:09 a.m. Chicago time. It is 10:09 a.m. here in France. Do hope you are doing well. So it has been a very long time since I recorded a video. Apologies for that. Thank you for all the well wishes that I had by email and message over the last couple of months. Won't talk about why I've not been putting out a video, but suffice it to say, just come back from my second trip to the UK in as many months. Glad to be back in France. And the reason putting out a video today is yesterday, Monday, 22nd of November, we had a little bit of a run for the doors kind of signal, and we've got some momentum patterns kind of working through the index chart. So I want to talk about the S&P 500 and the other market indices and show you what I am seeing. Remember, markets run from exhaustion to exhaustion, from exhaustion selling to exhaustion buying. You've got to get those kind of exhaustion patterns to reverse the market because it allows enough of the volume to trade from the professionals to the amateurs, from the strong hands to the weak hands and back and so on. But yesterday's activity was about 1.4 million contracts traded. There's some better volume going on here, and the range top to bottom on the E-mini was about 66 points, so it was pretty big. We were expecting some kind of rolling over yesterday because of the 15-minute chart putting in end of trend patterns, but how it worked itself out with this kind of gap up and sell down was kind of interesting. So let me just show you the 15-minute chart. I look at the daily chart kind of broken down into the various time levels below that, the 15-minute, the 45-minute, the 135-minute, and the daily chart. So you can start to see the pullback to end of trend signals ripple through the timeframes here. So on the 15-minute chart, the lowest time frame, we had our left shoulder go off here with pullback to end of trend on the lowest time frame. You can see it's the lowest time frame because it's the slightest little kind of support and resistance lines going on there. Then we ripple through the next time frame, which is 3 times that, the 45-minute chart, with a little pullback to end of trend on the intermediate time frame. And then we go through pullback. The pullback signal is just under that red dot there, but pullback to end of trend on the highest time frame, which is the 135-minute chart. So we got everything kind of going on there that we know this is going to be an important inflection point. And then we actually start to see pullback to end of trends underneath this resistance on the highest time frame, a little one there with the lowest time frame, then the intermediate time frame, and we have a triple going on here. So we have resistance on all 3 time frames. But the way it worked out on Monday was they gapped it up in the overnight session and then used that kind of extreme activity to sell off. And you can see that in the volume activity here. So this is the gap up on the Sunday night into the Monday. They got it up to 47.40 and then bang, the professionals just sell it down there with an exhaustion sell signal kind of getting the move going. We have a kind of a weak retrace into those highs at 47.30 and then we sell off towards the end of the day. So that's kind of interesting activity on the lowest time frames where we can see what the professionals were doing. They were kind of manipulating the market in order to get those kind of high prices. But what I'm seeing on the daily charts, though, we're starting to run out of puff. So the market kind of tops out. Either with professional activity or amateur activity, we can either have weak buying into the highs or professionals taking profits. But what I like to see is exhaustion patterns where we run from exhaustion to exhaustion. So the low was made back in 2020 March, April with an exhaustion sell signal, bullish divergence, and we kind of get going. This exhaustion buy signal is showing the strength of the buying of that activity, that V reversal, kind of getting this move going. We have a little bit of a false signal here, exhaustion buy, bearish divergence. We don't end up topping out with that market activity there. We keep on going through the highs, and we've had another exhaustion buy, bearish divergence. This pattern only appears in the S&P 500, doesn't appear in the other indices. But we do have exhaustion buy on all of the indices right now. We're starting to put in the bearish divergence. It's cropped up first on the S&P 500 and the Nasdaq. It's not coming on the Russell or the Dow yet on the futures market, but I do expect that to happen in the next couple of days. So we're starting to run out of puff with exhaustion buy and bearish divergence. So then we go look at our system chart for the S&P 500 at ES, continuous contract. There's our exhaustion sell back in 2020, and we run to the highs here with exhaustion buy going on here. No bearish divergence come in yet, no change in trend. So that entire move better sine wave has showed us in an uptrend on the daily chart there. So all the bars are red, so that shows an uptrend. We've got to break supports to get into a downtrend and start showing bars in white to see a proper reversal of this. And we've got a little bit of time to run, because on the daily chart we've got to go through support and resistance we've got to break through supports on the intermediate and the highest time frames, but that's not happened yet. We've not even got the weakness yet on the daily chart, but we've had the exhaustion buy, and we'll start to see bearish divergence kind of come in. So the E-mini is pretty strong. The Nasdaq is also pretty strong, again showing the exhaustion buy pattern there from the exhaustion sell at the lows down here. The bars are showing red still, so we're still in an uptrend until we break supports, but I'd expect to see that start to happen if we get this kind of weakness rippling through. The Dow, there we go, there's our exhaustion buy, still in an uptrend, but we've got to start to see breaks of support in order to get confirmation of a downtrend. And then lastly, the Russell here. Russell is the weakest of the lot, kind of for me this is what I call killing fields kind of pattern. So you can see the blue professional bars force the Russell up into these highs here. We had a little bit of overshoot over the last couple of weeks, but this is really important, and the trailing stop of the blue professional bars is really important. So I view that as they've sold off from the lows down here, March, April 2020, blue professional bars coming at the lows, and here what they do is they force the market up at that point there in order to get out, use all of this kind of range trading activity to get out of their positions, and we'll have confirmation of that as soon as the low of that trailing stop, trailing behind the blue professional bars, kind of is broken. But for me, that's a killing field kind of pattern. So there we go. That's all of the indices. You can also see some of the other ETFs that are tracking other indices that are a little bit kind of weaker as well. So EEM is always interesting because that's the emerging markets, heavily weighted towards China, and you can see basically the overseas markets, the emerging markets, topped out at the beginning of this year, 2021, here with this high being made. And we've actually had a signal to break into a downtrend with the weakness after about May. And it's been in a downtrend kind of ever since, with all these bars being white. And then with the activity over the last couple of days, we've had an under the lip signal here, which is when we have a little bit of a retrace underneath this trailing stop with the professionals, and we're breaking into, likely to be kind of new lows here on the emerging markets. This is what I mean by a killing field type activity. So we have a market top being made here, and then the professionals step in order to force the market up. And it kind of traps people into this activity here where they think it's going to break to new highs, and it doesn't. It becomes range bound at that point, and they're using all of that time and that activity to exit their positions after they've forced the market up. So we get kind of confirmation of that when the low of that blue professional bar gets broken here. You can see the trend kind of flips to the other way. We've got one of these under the lip kind of signals going on here. So that's the emerging markets. Of the emerging markets, I like following the Aussie market here, and you can see we've been in this uptrend, but we're close to breaking down. As soon as we break 24.51, this is all going to kind of flip around. We've got our exhaustion buy, bearish divergence back at the beginning of the year. We've got our trailing stop here, a little bit of kind of a killing fields kind of going on here. We've had overbought on better sine wave. That's the grey activity there. As soon as we break the blue professional bars, that's confirmed downtrend. We'll get a reversal signal there on the Aussie market. Then a couple of others to kind of look at for kind of weakness, to show weakness. The first one is HYG. So this is high yielding bonds. This is the junk bond market. And you can see here that we're in a downtrend. We're overbought. Yep, we kind of broke up to new highs here, but those are kind of just flushing kind of traders out, and we immediately reverse from those highs. We got weakness going on here, nasty day yesterday. As soon as we break below this support level, trailing the professionals, we'll get a confirmed downtrend there. But it's been rough going for high yield bonds to not be able to get through this activity since the beginning of the year, kind of mirroring some of that activity on the EEMs, the emerging markets. And then lastly, I put out a tweet the other day when I saw this pattern. This was on the US real estate market ETF, which is IYR, and we had a similar trade kind of going on here. This is an under the lip kind of pattern here. We break down We come back up under the lip that's been formed by the professional activity. We get a resistance and we start to move away from that. It's not broken into a downtrend yet with white bars as yet, but we've got a signal going on. We're overbought in terms of better sine wave. We've had our break below the blue professional bars. All we've done is we've just kind of come up to test. We're kind of coming back down. So that's the story for Monday, is that we've kind of run out of steam. We're starting to see bearish divergence patterns kind of coming on better momentum on the indices and the futures. We've had weakness in the Russell and the emerging markets for the last several months, and we've also got junk bond market weakening and the real estate market starting to weaken. So all of that is starting to come together. And on the flip side, I suppose we're starting to see strength in bonds, so we'd have a little bit of a rush to the bond market. So we've been in an uptrend in the bond market for the last couple of months. That's why the bars are red in an uptrend. A little bit of a bouncing ball pattern here. That's similar to the reverse pattern of the under the lip. So we come back down, bounce off the support here that's been triggered. We get a bouncing ball pattern. We just need this to kind of trade up and get below above 164 for kind of confirmation there that we're in uptrend in bonds. And of course, the signal on dollar index has been very good since the beginning of this year, where we got that triple going off here. It's been in an uptrend and continuing to strengthen. So maybe a rush into the risk-off kind of assets, dollar index and bonds, and out of equities and emerging markets, junk bonds, and so on. So there we go. Yesterday's activity running for the doors on the equities market, and let's see how it turns out over the next couple of days.